free to the public live lab. So this is basically the first 30 minutes of an hour and a half of us at Algo Factory going live, talking about charts, answering questions, and basically showing people the nuts and bolts of trading. And we put this together, this live lab, for our newer traders who might have some beginner type questions. And we also went ahead and made it available to the public so that the public could also get some of that information. And should they want to learn more, they being you, go ahead and go to the link and QR code I'm about to put in the bottom of the screen here. It's www.algofactory.tech. It's not a link you can't click on it. Just type it in your website, www.algofactory.tech, or zap that QR code. That'll take straight to the site. Also, if you're watching this on YouTube, whether you're watching it live or you are watching it not live, please like, subscribe, share, hit that notification bell, all the stuff that they always tell you at YouTube videos. Do those things, okay? Helps us out big time. And the bigger our community, the better, right? So the more people who join us, the more of a resource we have. We already have well over 100 people in our private group, and they're actually helping each other out. So it is a resource to have more people. By the way, we're gonna raise our prices pretty soon. Those who get in before we raise the prices will be able to have that price grandfathered in for that tier of service. Okay, so enough commercial. We had some questions regarding how to do a Fibonacci retracement and a look at some volume nodes. Okay, we had that from Brad, who's one of our private members, and Brad is really taking this on. Good on you, Brad. I don't know if you're watching right now. I think you are, because I think we were just kind of talking earlier, and you're down under, so you should be watching. So let's see here. By the way, feel free to comment in the chat. Even if you're not an Algo Factory member, you can ask questions. We can answer them. Our Algo Factory members in our private chat will be prioritized. Their questions will get answered first. But if you are, even if you're not watching this live, you can actually ask questions in the YouTube comments, and if I can get to them, I will. So, definitely feel free to do that, okay? All right, so let's see here. I'm going to go ahead and prep the screen. We're going to look at the euro, and we're going to look at the EUR-USD4X pair is what that means, right? So, and we're just going to go over Brad's question initially. We also had some fundamental comments on Ethereum from one of our members. There were some concerns about some issues with the SEC, and I'm going to wait for the gorilla. I don't know if he's going to make it for. He usually comes on these beginner live labs, whether he's with us from the start or whether he shows up a little bit later. But View the Gorilla generally shows up, and he has a bit higher of a view than I do. He has the 30,000 foot view because he does deals with some pretty big players, and he has a feeling as to what's going on. So if the gorilla does not make it on, I'll go ahead and see if I can opine, give my opinion on that. But in the meantime, we're just going to look at the charts, and we want to look at the 30-minute chart. So let me clean this up and back out of this here. And so what we're looking at here today is how to do a Fibonacci retracement and look at the volume nodes. Okay, so this is actually a pretty key, it's a key aspect to my trading, okay? And in trading, what you have are impulses and retracements. So if you look at the price action here, an impulse is going to be a hard move in one direction, and a retracement is going to be kind of a like taking a breath from that move, right? So if I were to illustrate this with these arrows, this would be an impulse. There's some caveats to this, right? There's some nuance, but this essentially is kind of like one big impulse. You could, to really be a purist about it, let's do this right. This is an impulse right here, really, right? So that one move without any real interruption from here to here, that's an impulse. So if I were to move this arrow, you're going from the bottom of this wick to the top of this candle before price does a reversal. So here you are. This is an impulse. A retracement is going to be like, this is like the breathing in, right? That's one way to look at it. And then this might be like the breath out. The breath out is kind of like a contraction, if you will. So that's one way to look at it. So the market moves in fits and spurts, right? So it moves hard in one direction and then it kind of takes a break, right? In this case, for the impulse and the retracement, what we're going to teach is how to measure these and how to kind of predict these, right? One of the tricks about an impulse is you don't know it's over until it's over. Now you can make some guesses as to when it might be over. You might be able to use structure, you might be able to use algorithms, but I think Brad was trying to do an impulse and possible retracement measurement based on this move down. Now, I took a short on this yesterday. I got out earlier than I needed to, but I made some pretty good money, and price didn't really go much farther than when I got out of the trade. So I did almost like a 2-to-1, which is great. But right now, we're going to assume this is like our impulse, right? We don't know if this really is going to be. This could continue down, right? So this impulse might not be done. But if this impulse were to turn around, if this were a pivot point where you see that Roman numeral 3, right, which is just an indicator that I've been kind of testing lately, so don't worry about the 3. But this move down is kind of like a hard move down, and then you might get the retracement in this direction, right? So it's like the market kind of expands, and then it does a contraction. Once the expansion energy is done, it's going to contract, and generally things move in Fibonacci numbers are kind of what are used. Okay, so Fibonacci is a tool that it uses these proportions that exist in nature. It's like in the joints of your fingers, it's in plants. If you look up Fibonacci, you'll see that it's everywhere in nature. And it just so happens that in trading, these impulses and retracements tend to kind of loosely and sometimes not so loosely obey the Fibonacci numbers, right? So each of these levels you see on the left, with the exception of the 0.5, 0.5 is not a Fibonacci number, okay? But each of these levels on the left are kind of the more relevant Fibonacci numbers. There are others, right? Or I should say Fibonacci proportions. The numbers might be a little bit different, but without getting too deep into what Fibonacci is, the most important one, the most common, the golden ratio they call it in nature, is the 618. So you can see it here on the screen. I just put a box around it to make it a little bit easier to see, but it's that 0.618. That's where price tends to retrace to, okay? Now, I'm not saying price is going to go up and do this right now. Price, like I said, could continue down. And then, of course, if price does continue down, say, let's just pretend the price continued down to here, then we would actually have to move our Fibonacci tool to match that, right? And so what used to be the 618 now no longer is, and never was in the first place. Okay, so without getting too philosophical, we're just going to pretend that right now this is the end of our retracement. Maybe, like I said, there's an algo you have that, a set of indicators that tell you, okay, there's a very high likelihood that this is going to turn right here. As a matter of fact, this Roman numeral 3 is supposed to be that. I'm not sure how effective that really is, but that's what it's supposed to be. It can also go to the 786, the 382, and quite frankly, it can go anywhere in this area. It might not even touch one of these numbers. It might touch all of them. It's not an exact science, because trading simply is not an exact science. So, morning, Brad. We see Brad on the stream here, and this is actually Brad's question that we're answering. Okay. So if I were to just purely go by the Fibonacci numbers, and if this really was where price turned around, then what we do for our Fib tool is, I will redo this. I'll show you again. On the top left here, there is an icon here, and you use the Fib retracement tool. You start at the beginning of the move, you go to the end of the move, and then you click again, and your Fib tool is all lined up. Okay, and then what we can kind of probabilistically assume, provided that price actually turns around here, is that price will probably head to the 618. It's just a decent probability that it will. If you want to know the probability, what you could do is look at the 30-minute for the EUR/USD, go ahead and test that back through history, and you would actually have an idea of how that works. And that's back testing, and that's another subject. Okay, so now another way to increase the probability of your estimation as to where price may go, you can use a fixed range tool. And this is a pretty simple tool here. There's a couple of tools like it. It's the one that I like. and it's the fixed range volume profile. You start at the beginning of the move to the end of the move, just like you do with the Fibonacci tool, okay? And as you do that, what'll happen is you're going to look at volume nodes. You're going to look at where a lot of trading happened within that area, okay? So within this impulse where most of the volume happened. And the way this works is you can kind of box around where these bars head out, where these bars jut out. That's where most of the volume happened. So what I tend to do is I will kind of do this. So it's for illustration purposes for myself. I'll know that price is going to be attracted to generally where these bars kind of jut out. And you have a little bit of volume here at the 618. It's not that healthy, but it's there. And then there's a lot of volume up here on the top. But of course, the farther away this is, and if you're in a strong downtrend, if you're in a trend that is still going to want to head down on a higher time frame, the farther this wants to retrace, the lower the probability is that it will go there, right? So if price is headed down on a higher time frame, right? If you look at like daily chart instead of the 30-minute, and you can tell the downtrend is very strong, then the higher that you want this to retrace, the lower probability it is that it's going to get there. Okay, usually, not always the case, but that's almost a rule. So in this case, what we're looking at is we know the 618 tends to be the golden ratio. There is some volume sticking out right here, but you'll notice there are gaps in volume, right? You see where the volume isn't? Okay, so everybody uses, like, especially crypto traders, they tend to use this tool wrong. Okay, everybody seems to think, and I don't know why, that price will bounce off of these order blocks. These are called order blocks. They're called a lot of things, volume nodes, whatever you want to call them. And for some reason, a lot of crypto traders treat this like price bounces off of it. In a way, it looks like it does, but this is not how it works. Okay, and there's some theory behind this, but we're not going to get into it today. The long and the short of it is that price actually is attracted to where these volume nodes come out because that's liquidity. Market makers push price towards liquidity. Okay, so market makers make money that way. Market makers do not make money in the gap areas because there is no liquidity. There's not enough trading that happened in the past, and therefore probability of trading happening in the future is low, and they need trading to make money. So this is why you're going to see price actually tend to bounce off of the areas that are the gaps, as opposed to the areas that are not the gaps. You get it? So price is attracted to the volume nodes, price bounces off of the gaps. That's how it really works. And you're probably only going to hear that here. There's very few people who actually trade it that way, and this is the way that it really works. Okay, so in this case, what we could do is, okay, 618 does have volume, but as price, let's just say it even turns around, right? Because it may not turn around. Price may continue down, but let's pretend that it's going to turn around, right? That it has a probability of turning around. Let's just say that your algo said go ahead and go long. Your algo said let's go ahead and bet, if you will. I don't like the word bet, but let's just say let's risk that the price is going to go up, and you take a trade and price heads up. As it heads up, your probability that price is going to bounce off of one of these gaps is kind of high. Like it might not even make it past here. And as a matter of fact, if you zoom in on the current example, you will see that price did so far reject price in these candles right here. Price tried to make it up into here. You see those wicks going into this gap area, and then price is actually rejecting downward. So far, price does not want to go into this gap so far. Now it may, again, I'm not looking at the algos. I'm not really, or at least at my algo, I don't have a read on what may happen here. Structurally, there isn't really a whole lot going on. There is this older structure off of, which price may bounce, and it's not really bouncing off the structure. It's actually bouncing off of the area just above it, but we're not going to get too into that right now. Just know that structure, that pivot point right here, is a decent place where price may turn around. It's old structure. It's covered by price action. It's not as relevant, but it is still there, and the market is looking at that. So what may also happen is price, like I said, it may continue down, but either way, if it continues up, you have to look for rejections. You have to look for price, if it heads up, to possibly turn around when it hits one of these gaps, right? So that's the way that can work. So as it heads up, if it heads up, then it might kind of bounce off of here, right? Or it might continue to head up, but then bounce off of here. It might hit your 618 and then reject just above it. So that's how it works. That's how this goes. And again, I will take a brief look at the algos to kind of determine what I think is going to happen. If I'm not mistaken, I think price will continue heading down for a bit, or at least we might get is a consolidation in this area. To look at the wider impulse, if I were to go to a higher time frame, this would be the impulse, say from here to here. Yeah, I got you. Be good. We'll look at it. We'll look at USD JPY. So this would be on a higher time frame. This would be the impulse, right? If we zoomed out, and to look at the volume nodes. Okay, so price right now on a higher time frame, it wants to reject and head back up based on this gap. There's a pretty big gap in volume right here, right? Plus you have this structure, which this pivot point is why there is a gap right there, more or less. So it's going to be attracted to two areas, right? Price is going to be attracted to this area right here, which is called the point of control, which is where that red line is, which is where most of the volume is in that impulse that I just measured. Okay, so price will be attracted to here, and price will be attracted up to kind of generally this area, more or less, like definitely right here and right here. Price will be attracted to these, but the question is price going to want to continue to head down enough to push through this gap area? So far, it's made it handsomely through there, and as a matter of fact, that the wick made it all the way down to where the volume starts to come back out. So some liquidity was grabbed, and that's again getting into some kind of more higher level technical terms for the new traders. But this is not just aimed at brand new traders; it's also where the experienced traders can gather information. I do think price will continue to head down. So I do not think now if there is a retracement, I think it'll be a lightweight one. But if we're looking at this right here at a retracement at all, I think it will. I was kind of, look, I took this short right yesterday. Everybody saw me do it. I did it live for the Algo Factory people to see. If there is a move up, I'm kind of looking at maybe something like this and then taking another short. I think that's how this is going to go. Okay. So we'll see. We'll see how it goes. You gotta take it level by level. We have a request from Be Good to take a look at USD JPY. So we got a little bit of time left. I'll go ahead and take a look at it. Of course, if USD JPY goes into, if we end up going into like past the beginner deal, we have plenty of time in the private lab to go over it. So don't worry, Be Good. You're gonna see what you want to see. Rikuku, real quick, is asking a question. Hi, Cowboy. Would this be your trading hierarchy order? 1, mark out previous structural levels. 2, mark out liquidation and rejection levels. 3, algos. Take the trade. Yeah, pretty much. I mean, the algos I'm going to be looking at first. Rikuku, it's you've got it more or less correct, but I always look at high time frame bias before I do anything. And then once I know the bias, I know which way the wind is blowing. And so I'll have an idea whether or not structure might get broken. But yeah, I try not to trade against structure, certainly. If I see a previous structure level at that previous pivot point, like we saw in the prior example, if I see a big gap, it just depends on what time frame I'm trading, and whether or not the higher time frame trade can push through those kind of gaps and those structures, right? So, minor structure versus major structure. But I mean, in essence, what you said is pretty much the case. But before I look at that hierarchy, the number 1, mark out previous structure levels. Number 2, mark out liquidation and rejection levels. Number 3, the algo. Number 4, take the trade. That's more or less it. But before I do all of that, you can mark it as 0. I take a look at the higher time frame bias, and I tend to trade along with the bias, as I am a trend trader. I'm a continuation trader. I look for pullbacks in a larger trend, and then I move forward with that. The trend is my friend. Now, there are those who trade against the trend, and there is nothing wrong with that. I know people who make an entire career out of trading against the trend. So there's not one way to do this. Just because I do something doesn't mean that that's the way to do it. The reality with trading is that you have to develop your own method, right? And once you develop your own method, you test that method. And then what that's going to do is, having tested and developed your own method, you are going to have the psychological reinforcement that will allow you to be successful. And as I said on the last, the Rogue show on Thursday, psychology is the reason most people lose in trading. Like, you could spend all your time, use a perfect method of trading. You can take somebody's method who is extremely successful. Their method is like, we'll use the term foolproof. I don't like that word, but we'll say that, somebody has a really good method that is proven over time, and you could just go ahead and trade that method, right? It's like, well, they've been doing it. Why can't I do it? They're making money. I should be able to make money. And that is a true statement. However, the problem is that that is not your method. Now, you could arguably go back and you can test that person's method over time, and you could, that will help you to get the psychological profile that you want. But the reality is that when you create your own algorithm, there's a certain investiture, if that's a word. I got that from I actually got that from a book series. I don't even know if that's a word. Let me look that up. There's a certain investment anyway. There's a certain psychological and mental investment that will okay, investiture is the wrong word for that. Investment. And anyway, that time investment is going to give you a certain level of ownership over that algorithm that will give you the confidence to know that it is a good, workable algorithm, right? So this is why we want to make our own. Here's the thing about it. Trading, a lot of it has to do with personality, okay? Just real quick, be good, USD JPY, bullish on the high time frame, okay? Well, bullish on the bullish against resistance, right? So it's and we'll look at it deeper. I just want to talk about this psychological aspect, and then we'll really take a hard look at USD JPY. So be patient with us. The psychological aspect of trading and ownership of your algorithm is going to also be good because trading has a personality component to it, right? So what that means is that there's swing trading, day trading, trend trading, counter trend trading. There's all these different kinds of trading. And a lot of it has to do with your personality. If you're somebody who needs results quick, or you need to be in and out of a trade, it's kind of in your personality. Like me, I'm in and out, in and out, in and out. I talk fast to work fast. I'm a day trader. I'm in and out. I want to be able to hop in a trade, manage it, take my money and run, right? To sit there and hold the trade for 4 weeks, that's like nails on a chalkboard. It's no, I've done it. I used to do it. I've done it successfully. It's not like I can't do it. But for me, that just is too long for me. I need money in, money out. That's how I roll, right? That's my personality. Trend trading is my personality. If you trade with the trend, chances are price is going to go in your direction. And so the measurements that you make are going to be a bit friendlier. And the way the price acts with your measurement is going to be more friendly. The difference is that you're going to have a lot of issues trading against structure, right? So you do, in a trend trading scenario, you tend to have to trade against structure. So that's something I'm not afraid to do because I have confidence in my algorithm to go ahead and punch through structure when that time comes, right? There's structure against which I will trade, and there is structure against which I will not. So this is my personality, and my algos are built based on my personality. I also have algos that are different than that, and that might reflect that I have some weird personality situation. I have different personalities. I certainly have a dynamic personality. I'll tell you that right now. But whatever, right? So without getting into my own psychobabble, psychoanalysis, we'll go ahead and move forward, and we'll talk about the USD JPY. Okay, so I'm going to go on a higher time frame, and just kind of like, see, I know that the USD is bullish, JPY is bearish, and that has been the case for a long time because of the way that Japan manages their currency. They basically are doing what's called yield curve control, and I can tell you high time frame it's bullish. Relatively high time frame, it is bullish against resistance, right? So its price is pushing up. However, price is also at resistance. It's kind of pushing up against what appear to be some all-time highs against the dollar, and it is in the midst of breaking them. It hasn't quite broken it, but it's just pushing up against it. And so what we're going to see over time probably is price hanging out up here. Now, this is unless Japan changes what it's doing. So as long as Japan stays the course, you're gonna probably see price consolidating below that resistance and eventually break it. It can't keep getting pushed down forever. Now, what happens is that this move up is, like I said, it's based on their policy. It's, I don't want to say artificial, but it's the reason price moves up is that they're keeping their currency weak. And it has to do with the way they manage the currency, and it's also a sort of cooperation with other governments, and banks don't work alone, and that none of that matters in exactly right now. But what does matter is that either price is going to break above or not. And if it doesn't, that means that Japan probably has changed what they're doing. Now, on a lower time frame, you'll notice though is that the price will kind of shotgun down here and there. Even though it wants to head up and it keeps heading up, you'll get these kind of hard moves down, and I mean hard. So we've zoomed in quite a bit here, right? And so you'll notice that the price has these kind of hard, like just pushing up against, grinding up, and then bam, hard little move down. Then you have grinding up, slow grind, really quick down, slow grind, hard down, and then kind of evening out, and then the slow grind up, and then a quick hard down. See, it's slow grind up, hard down. That's what we're seeing, right? For the most part. And what this is that, and this is just my own kind of take on it, so none of what we say is investment advice, and do your own research. But what I'm seeing here is that in order for this to continue to work with their yield curve control, things tend to break when you force things in an economy, right? And you force something, it breaks like anything else. And so what they have to do is kind of release the pressure. And then once they release the pressure, they can kind of retool everything to where it can take a little bit more pressure. And that's what these quick moves down appear to be, just for me. Just saying that, my own thing here. So now at some point, are we going to see a much harder move down, or are they just going to keep pressing up? Well, that remains to be seen. But what we can right now, since the last week or two, since 26 October, we're actually seeing a little bit more of what appears to be like less of the grind up, less of the quick move down. But right now we're in the middle of that grind, certainly. This is like the, grind. So the thing about the JPY is that it's very much being pushed around by their system. And it's not to say other systems don't do that, but the JPY is very much made weak by their eternal money printing. So that's all I got for you on the JPY. I mean, it's just grinding up. Like, look at that. This is not really organic price movement. Like organic movement has ebbs and flows. Like you want to see organic, at least less inorganic. Like take a look at the euro. The euro's got ebb and flow. It goes up, it goes down. You know what I mean? Yeah, sure, it has these grinds, but if you look at it over time, it's just, you have impulse retracement, and then it changes direction to where the impulses are up, retracements are down. The JPY is not so much, at least not lately. So, it's just a little bit less organic. The current move, although it does seem the current move is based on probably the Dixie, and the current move is overall inorganic. It may not have as much to do with JPY as it does with the dollar. But either way, your algos should be able to help you with that. I hope I answered your question. Be good. If you want more specific data on USD JPY, ask it. We'll hit it in the private lab. For now, I want to thank everybody for coming in. I hope today's information was helpful. I hope I did not go too fast for the beginners, but sometimes that's just what it is. If you go to this website, www.algofactory.tech, you can see who we are, what we do. And we are going to raise the price. We're probably going to raise it pretty soon. So if you get in for this tier of service at $49.99, you will be able to keep and grandfather in that price as long as you do not let your membership lapse. Okay, so come check us out. We also have an affiliate program. So if you have like an audience or a group of people that you can bring in, you can actually make a fair amount of money. It's a really profitable affiliate program. So do keep that in mind. In the meantime, I'm going to go ahead and get out of here. But thank you so much. And for those of you who are in the private lab, hang tight. For those of you who are not, we'll see you tomorrow. Thanks for tuning in. Like, subscribe, share, all that stuff. Notification bell.